right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Thank you so much for being here on this Thursday. R Pink, much love to you, man. Welcome in. Thank you for modding for me, and thank you for doing such a good job as always. Yes, please, guys, hit the like button on your way in, or hit the like button throughout the stream if you do get any sort of insight into the market from this live stream. Ryan Henson, good afternoon to you, as well as Little Rich 69, Barbalicious 994. That's an awesome name, Barbalicious. And Saved by the Blood Rom, good day to you as well. So guys, it has been a bit of a slow day today for Bitcoin since yesterday's lows. Now, in yesterday's lows, we finally did come down and hit that box of support that I was looking at between about $74,900 and $74,600. And we are seeing a decent move to the upside from that bounce from support. And I'm looking at now a little bit of a smaller range that has occurred because we have from our highs on Sunday, which on Coinbase, it is a lower high just by a couple dollars. And on other exchanges, it's a higher high just by a couple dollars. So I'm gonna call it a double top, pretty much a double top there. Because this is a double top and we didn't really see a clean liquidity grab, I am assuming that we can come up again to make new highs. But do we continue this local downtrend a little bit further until we get up to those levels and potentially make new highs? So there's a few things from yesterday's live stream. We're bouncing, but on this drop to the downside that we've seen, you can see how we had a big kind of imbalance candle come in towards the beginning of the drop. We had a very small three-wave corrective move in there, and then another big imbalance candle that came in. So after those two, I guess, like micro impulses to the downside, we have started now grinding sideways between the POC of the range and the value area low of the range with some little bit of deviation on both sides. But we can be looking at this small range that has developed really since Monday throughout this week. We have this small range. And so if we throw that volume profile on the charts, you can see that earlier today, and let me hide this other one so that we don't get it confused. Earlier today, we did come into back inside the value area low of the range. Now we bounced, let me actually just put that other one back on. You can see that is also the value area low of our larger range that goes back to Friday, April 17th. But you can see we were chopping around the value area low, both of them. We broke back in it overnight, rejected the POC of the small range, only to come down and backtest the value area low of our larger range since last Friday. Now, because we backtested value area low and a VWAP here, the daily VWAP, and we expected to make a new high above this local high right in here. And we've done that. We pushed up, continued to make new highs. It was overnight for me, continued to make new highs. And now we're just chopping around the POC of our smaller range from this week, the last 4 days of price action. But as we are chopping in here, so one of the things that I'm looking at within this chop from yesterday's low, you can see that so far it is looking like a pretty nice three-wave corrective move. And also, the dump that we saw yesterday looks more impulsive. So because this looks impulsive and this is starting to look corrective in here, I am looking potentially for a lower high to be put in before coming down and seeing that liquidity get grabbed that we did front run a couple days ago. This liquidity right in here. And that liquidity is coming in around 74.8. 74.817 is that liquidity. We front ran it yesterday. It's because we hit a 786 Fibonacci. There was a 786 Fibonacci in here, and the 786 is common. 786 golden pocket's a common area to put in for a higher low. And if this is considered the low and it is a higher low, I would expect a higher high above the range highs, in this case, above 79.5. But do we see this move down, extend a little bit more until we actually grab liquidity? Because inside these sideways ranges, and from Friday, April 17th, we are actually, you could even pull it back to Monday, April 13th. So for the past few weeks, we are kind of creating this topping sideways range in here. And I do want to talk about on the daily time frame, because on the daily time frame, I did warn about the bear divs that we were seeing on both NAMI and Market Cipher B. You can see on Market Cipher NAMI very clear. Market Cipher B, there is slight bear divs there as well. We are starting to see this move up from 65K, really starting to round out and potentially roll over here. And we don't want to roll over too far, because if we start to roll over too far, then it's likely that the impulse from 65K to 75.9K is over with, and we could see a big dump to the downside. But if we can just start to roll over a little bit and hold the most local support level, then we do really have the chance of continuing up higher and continuing up to that $82,000 and even $86,000, $87,000 area of resistance. Right now on the chart, as far as, and I posted this in the Telegram about 20 minutes ago, we are seeing from yesterday's low, we are seeing some bullish CVD absorption. Now, absorption plays out about 80% of the time. So I expect us to at least take out our local highs from earlier today, which would be very nice, because I would like to come into that that golden pocket at 76,900-ish. This golden pocket, this value area high coming in 76.8, 76.9. This area is an area I'm looking for that potential 3-wave corrective move to end. Let's actually pull our trend-based Fibonacci extinction in here. Yeah, and you can see your trend-based Fibonacci extinction, your 1-to-1 target is right in that zone as well. So it looks very nice, guys, for a potential scalp short during the live stream. Hopefully we do get it during the live stream. Hopefully we do have confirmations to actually enter the short there during the live stream. But locally, because of the bullish CVD absorption that we're seeing, I expect continuation to the upside. Now, if we come into that resistance and I don't see confirmation to short, I will not be shorting, because there is the potential that finally hitting into our green box of support was the low, and we are going to continue with that bullish market structure, continue making higher highs and higher lows. The other thing we can look at, if we start to break out of this smaller volume profile, you can see this is our range of this week, and then we had a week-long range prior that was up in this area. So we can pull the volume profile of that range, and we can check out that range and see where the value area low is coming in at, which is going to be around $77,500. And potentially, even with it being so close to the highs, we could sweep those highs. I mean, let me zoom out to the 1-hour chart. I believe we had a naked daily point of control somewhere around there. Nope, never mind. All right. Let me check the chat here real quick, guys. Welcome in, everybody. Thank you so much for being here. Golden Liquidations, thank you so much for the like, man. I always appreciate you in here. I always appreciate your support. Ravin J. say, God bless you as well. And I'm sorry if I butchered the name. No maliciousness there. But thank you so much for the kind comment, and God bless you as well. Wanderer 5813, welcome in, man. Good afternoon, night. Hope y'all doing well, man. Doing well. A little bit of a slow day today. I was thinking about taking a scalp off of the VWAP about, what was that, 3 hours ago? Taking that scalp off the VWAP. And honestly, I just was not paying close attention, and we bounced. By the time I saw it, we were already up too far, and I was like, okay, but this would have actually been a good, with the bullish CVD absorption that we were seeing, knowing if you bounce from VWAP, you could take that long position, like maybe, take it a little bit above, set your stop below that low, or you could even put it below this low here, and targeting that value area high. That's a very nice scalp trade right in there. So I'm a little bit upset that I missed that, a little bit, not upset, bummed, I should say, that I missed that trade. But it is what it is. There's always going to be another one. Samuel S44, welcome in, man. Thank you so much for modding for me and always being here, always showing support. Yeshwant, much love to you. Thank you so much for tuning in from India. Hope you're having a good one over there. Bullish on Parade. What's up, my man? Good to see you in here as always. Chicken Salt, good to see you in here. Jojo, Jose, and the Geek Story. Thank you guys so much for being here. Mark my words, 71K today, not financial advice, of course, just my point of view. 71K. Well, okay, so there is a potential to get a bigger dump to the downside. I mean, we do have some pretty intermediate time frame bear divs. Let's zoom out to the 8-hour real quick. And I was warning about this earlier in the week. Really, since Monday, I've been warning about these bear divs. But you can see specifically these 3 higher highs, and on some exchanges, this is a higher high. We have that pretty big bearish divergence with money flow draining out, about to cross into the red on the 8-hour. And you can see here as well on NAMI, the bear divs that we're forming here. So yes, these intermediate to high time frame bear divs could give us a bigger dump down. Now, 71K, I would actually like to see a little bit, if we're going to dump that far, I would like to see a little bit lower than 71K. I would actually like to come down to about 70,000 or 70,500 to about $70,000. And there is a big reason for that. First off, this low right here was a very, very important, this range low, these range lows were a very, very important range lows because it was the flipping of a bigger pitchfork, that bigger bearish pitchfork. You can see how in this beginning of this range, the lower band was acting as resistance. We finally started to break up, and then the upper band started acting as resistance. And this was the first time that we broke above it and flipped it to support. And so this flip from resistance to support really meant a whole lot. And it meant that Bitcoin could actually continue up to the midline, right? And that midline is that very important zone around 82K. So there was a lot of longs that stepped in on this flip right here. And if we look at our liquidation heat map, let me just zoom out to the past month of price action on this liquidation heat map. You can see that $70,000 area coming down to right around $70,000. We have a huge liquidity cluster right into that area in there. So if we are going to dump that far, I would expect us to see a dump down to the golden pocket, which is also going to be another high time frame back test of that pitchfork band, and it would grab that liquidity that is underneath these lows. Also, if you pull a golden pocket, so what we've been looking at on this channel is a contracting diagonal in an A wave. You have your 3-wave corrective move in a B wave, and this impulse here, I've been calling this the C wave, and we have a channel that we've been following that just broke out. Where is it at? Right here. This channel right here that we just started breaking down from this week. You can see broke down from it, back test, made new lows yesterday. Now, if we are going to actually see a bigger crash to the downside, if we pull a golden pocket, that would mean this, if we're going to see a bigger crash to the downside, that means this impulse is most likely complete. And if that is the case, you generally will, even in a bullish scenario, you'll retrace to around the golden pocket 786, somewhere around there. So if we're pulling that Fibonacci from our 65K lows up to our $79,500 highs, that golden Fibonacci ratio support is coming in at around $70,500 to around $70,000. So with that being the major target for a bullish pullback, a bullish retracement, right? We're retracing to the downside, but overall it's bullish because you expect to make a higher high, or excuse me, a higher low and then a higher high. That would be the key area. Now, obviously we have some support coming in before that. Let me go ahead and come back to that liquidation heat map. And you can see in here on the liquidation heat map, we also have a very strong liquidity cluster riding down to about $73,000. You can see right about $73,000. We have a pretty hard liquidation cluster down there, pretty aggressive liquidation cluster. And that is going to be right around your anchored VWAP, right? This anchored VWAP is from $98,000. And that was a key pivot high that we put in this bear market. So it was our corrective range high before seeing another impulse to the downside. And when we take a trend, an anchored VWAP, it's really a volume trend resistance, right? Like if you're below it, you keep rejecting, you keep expecting dumps to the downside. But when you can flip that VWAP to support, you expect the trend to continue to the upside. And we've seen this, I've shown this many times on Ethereum. We saw this earlier in the year. Let's see, on Ethereum, if we look at this bullish anchored VWAP, you break above it, you flip it, you back test it, and then you continue up because you were able to hold support here. And so the trend continues to the upside. But then once you lose it, right? Once you lose it, acts as resistance, and then the dump continues. So these anchored VWAPs from key pivot highs and pivot lows are very, very important. And if we're looking at Bitcoin, that anchored VWAP from 98K, very, very important anchored VWAP. At the beginning of the range, it was acting as resistance. We saw a little bit of a failed auction above it here, but really acting as resistance. So if we come down to it, it is, since we've broken above it on, what day was that? Monday, April 13th. So the that that kind of range, that's that sideways range where we started to kind of curve over. Since that break, we have not back tested it. You can see we were chopping around it the week before a little bit, but we have not back tested that anchored VWAP since breaking above it. In this entire 3-month range, we have not, since breaking above it bullishly, we have not back tested it. So obviously that box of support, there's a reason why there's my next green box of support is at that level. And it would be a very, very bullish possibility if we do bounce from that. We could see a nice bullish impulse continue up. And in that scenario, I would expect us to at least continue up to around $80,000, $81,000, $82,000. But we just have to see. Now, guys, if we do get the bounce, like let's say we reject here, we get a double bottom in this green box because we didn't grab liquidity. Let's say we just grab this internal liquidity, hit the 786 below us, and that 786 is pulled from your last range low to your highs. If you look at that 786 Fibonacci, you can see 74,630 is where it's coming in. And the reason why I pulled it from this low, this was our prior range low, and that's important to understand when you're in ranges and you're stair stepping up. When you see a price action staircasing up to the upside, let me go on to the 2-hour chart. We had some very clear ranges over the past couple of weeks. We had, I mean, you see this, move to the upside, create that staircase. Move to the upside, create that staircase, that sideways range. Move to the upside, create that staircase. And this is the first time where we're finally starting to see a reversal. But that staircase pattern is important because the liquidity at the lows of the range are important. Liquidity at the lows of the range. Liquidity at the lows of the range. So that's why we have two important liquidity levels. You have the this low down here, which, by the way, that's why our green box starts, our next green box of support starts where it starts, is because that would be where the liquidity grab of this low is. So if we get that liquidity grab into our anchored VWAP, very nice level of support around 73,000. And then our next major liquidity grab within our staircase pattern is the 70K lows, $70,500 lows into your golden pocket, into your pitchfork band. But yeah, we could see a bigger dump. I don't know. Here's the thing, guys. Honesty as a trader, we don't know what the price is going to do. We can get a little bit of a bias based off Elliott waves, a directional bias based off Elliott waves, a directional bias based off CVD, based off volume, what it's doing on dumps, whether it's a corrective move or an impulsive move. And we can look at our volume. If volume is getting lower and lower and lower as we're correcting down, then it's probably a corrective move and we're going to make a higher low and continue higher. But we don't know what the price is going to do. So as traders, all we have to do as traders is we mark out the levels that we're looking to take trades at, both resistance and support levels. And then you can get off the pressure of saying, oh my God, am I going to be right? Is it going to pump to 80K, or am I going to be right? Is it going to dump to 70K? We don't have to know. We just have to be prepared for whatever happens at those certain levels. And that is the beauty of trading. It's not about predicting what Bitcoin is going to do. It's about being ready in every scenario. If it pumps to the upside, you're ready for the shorts. If it dumps to the downside, you're ready for the longs. And setting the traps and waiting and seeing if you have the proper confirmation to enter the trades. And I promise you guys, if you get into this mindset of not trying to predict what the price is going to do, but just marking out those levels of interest where you're willing to take trades, where there's high confluence to get a reversal, that is when you will start to be a little bit more successful as far as psychology in trading goes as well. Okay, so let me keep reading here. Dump it, bullish on Parade. So I think we are locally expected to come a little bit higher. I'm looking to come up to 76.9-ish, 76.8, 76.9. But we'll see if we get a dump after we reject from that, if we reject from that resistance. Right now, money flow on the 12-minute or 15-minute looks pretty good. Just crossing into the green on NAMI, you can see down here, and it looks pretty bullish in the green on Market Cipher B. But we would have some potential for some bear divs. If we do come up here, you could see we could have some potential for some bear divs on Market Cipher B. We'll have to see how it looks. India just unveiled their new nuke. It travels 300,000 kilometers per hour, Mach 24. Wow, dude, that's crazy. I mean, weaponry is getting wild. Is NAMI showing bull divs after those bear divs? So yes, good question, R-Pink. Yesterday at the lows, we did have some bull divs. So here's the thing, on the intermediate time frames, 8-hour, 12-hour daily, we are showing bear divs near the top. But now we are starting to see some low time frame bull divs. You can see here on NAMI, the bull divs on the 1 hour as we were making these lows. You can see actually multiple drives here on the 1 hour. If we go on to the 2 hour, you can see the clear bull divs here. On the 4 hour, you can see that we have clear bull divs here. So what we're seeing is on the higher time frames, we are seeing the bear divs. And the bear divs, at least when you see high time frame bear divs and money flow finally starts to top out, in the most bullish scenarios, you see a bit of a pullback that will form kind of a topping range, right? But it's not really a dump. It's more of just a sideways range that forms. And then but within that sideways range, you'll dump from the low of the range to from the high of the range to the low of the range. And then you continue with the bullish momentum. Now, in order to understand if it is going to be a larger sharp dump to the downside or a sideways range that's going to form where you might just range sideways and then continue the pump to the upside, you want to start to look for those low time frame bull divs into support, right? Into a support level, not just in the middle of nowhere, into a support level. So we're finally hitting that support level and we're seeing bull divs on the 4 hour and under. Let's actually go to the 6 hour. Do we see 6 hour? So, and let's see, 6 hour. You do see, yeah, you even see some 6 hour bull divs here on NAMI here. From this low to this low, it's this low to this low. So seeing some bull divs on NAMI on multiple, low to intermediate time frames, and then the high time frames are showing the bear divs. So what does that tell you? When you have high time frame bear divs, but intermediate and low time frame bull divs, it means range. It means ambiguousness, probably means ranginess. So knowing that we're going to range and also knowing that we're seeing this bullish CVD absorption from yesterday's low, could we make a bigger move to the upside? Absolutely. A couple things to look at then. If we're looking at scalp trading, obviously we have our local resistances above us. If it's going to be a 3-wave corrective move, we have our local resistances where we could look for the short just to make new lows. If we are going to see that larger sideways range continue, and you could even say this is the upper range that we should be paying attention to. That's why I had a volume profile pulled there at the beginning of the video or the beginning of the live stream. Then we can look at resistances within that upper range. So let's look at our golden pocket from the highs to the lows. If we look at that golden pocket, it is going to be coming in right where a very, very key liquidity level is. Let me hide this smaller stuff for a second. So at $77,800, $900, you have key liquidity from yesterday's highs into this golden pocket. Your range point of control, your upper range point of control also happens to be right in that zone. Very, very key level. If we break above the smaller volume profile, this smaller volume profile, value area high, which is where your golden pocket is, which is where your 1-to-1 trend-based Fibonacci extinction is, then I would probably look at shooting up into this area. And then if we don't grab liquidity, now, first off, anytime you have a liquidity grab into a golden pocket, it's a prime setup to see a reversal in the trade. Whether you're dumping into a liquidity grab into a golden pocket, as at $70,500, dumping into a liquidity grab into a golden pocket, it's a prime spot to see a reversal if we do that. If you're pumping into a liquidity grab into a golden pocket, it's a prime spot to see a reversal. So we have the levels that we can look at. And what we do now is we just wait. We wait until it gets to those levels. We're not taking trades in the middle of nowhere unless you're doing like micro scalping, micro intraday scalping, you know, which is like long the VWAP, take profit as soon as you break the highs, or take profit as soon as you hit your first local resistance. That is acceptable. If you're doing that, just make sure you're using good risk management, you know, risking 1 to 3% per trade, making sure that you're planning your trades, TPs and stop losses before you actually enter the trade, and don't get greedy on it. Once you hit your first TP, take out that whatever 50% you're going to take out, move your stop to break even, protect your position, and then you could let some run for psychology purposes. Okay, let me see here. Guys, welcome all in. It's good to see you all in here today. Everyone, please like the stream. Yeah, Decrypto, thank you so much, man. Welcome in too. Please like the stream, guys, if you do get anything, any sort of insight into the market from this live stream. It's sometimes right. Evening to you as well. Thank you all for you give us. Yeah, and thank you for the kind comment, man. I really appreciate that. Crypto Clown World, what is up, my man? Good to see you in here. Jojo, Alex, good to see you guys in here as well. Ads. Is there, you know, I don't have my YouTube settings. It's on, it should be on the balanced mode. So I definitely didn't put it on the high ad mode. So I'm not sure what's going on there. 15-minute just got bullish, 200 EMA or moving average cross. Should get some little pump here. Will be a good time. Yeah, I'm expecting a little pump at least to take out today's local highs. 76.9. Once again, golden pocket, 1-to-1 trend-based Fibonacci extinction, value area high of the range since Monday that started on Monday, kind of this sideways price action in here. And if we are going to see kind of that three-wave corrective move, that would be an area where we could look for the dump just to take out yesterday's lows, maybe see a double bottom, grabbing the liquidity from 76.8 and seeing that 786 at 76,630 or 74,630, excuse me. Okay. Which indicator is NAMI? So McCall, NAMI is this bottom indicator at the bottom of your screen here. And it is a paid indicator, but I did partner with NAMI Trading to get you guys 50% off. So if you're interested in it, you can get, if you click my affiliate link, and then when you're checking out on their website page in the promotions box, use Divine50 and you can get 50% off. But guys, let's say you want to become an expert in this field, like an expert trader, and actually make a living doing trading. Whether you're a plumber, an electrician, a welder, a trader, whatever it is, if you're an expert in the field, you invest in the proper tools to help you be successful in that field. So for me, both Market Cipher B and NAMI are tools that help allow me to get better profits, to get into better trades that are more probable to play out. Because we can mark out levels here, but I'm a confirmation-based trader. So I'm not just, as soon as we hit that level, I'm not just going to short it just because it's my level. I want to see confirmations that the trade is likely to play out. Not guaranteed, but likely. So I'll be looking for those bear divs that are forming as we come up into that resistance. And so what I use NAMI for is for trade entry and exits on my trades, to enter or exit positions, whether to know whether to do it or not. So it's a confirmation for me. And just like these plumbers that invest in proper tools to help them be successful on the job, to me, NAMI and Market Cipher B, they're both paid indicators, but they were both investments for me to be more profitable and to become a better expert in my field. So that is why I use these. Mark Dutch, welcome in, my man. Good to see you in here. I typed winking or divine hood, and Grok said, why not both, you sexy mofo? Dude, Mark, I was listening to you on Andy's stream. I think it was yesterday. And you are just so good with these entry comments, man. I love it. Thank you, Mark, for being here, as always. Much love to you. And I hope your traveling is going well, man. I know you've been doing some traveling. Big Big deals, well, dumping time. What's up, my man? Good to see you in here as well. We'll see. Like I said, guys, I'm very hesitant to call for a dump right now because we are seeing bullish CVD absorption. So the way that bullish CVD absorption works is when you see what CVD is, this line in the middle, CVD. This is cumulative volume delta. Now, essentially, that sounds really complicated, but essentially what this is in layman's terms is market longs and market shorts entering the market. So if your CVD is dropping, let me grab my brush. If your CVD is dropping, that means short positions are entering the market. If your CVD is rising, that means long positions are entering the market. But we need to know whether it's new positions or old positions that are getting stopped out. Because like, let's say, for instance, you're in a long position and you get stopped out. Well, stopping out of a long position is a market sell. So the CVD would be going down here, but it's not a new short position that's pushing the price down. You can see your open interest is dropping here as well. And what is open interest? Let me just go on a tangent here. Open interest is whether positions are opening or closing. So if open interest is increasing, that means new positions are entering the market. If open interest is decreasing, that means positions are closing out of the market. So when you have both your CVD and your open interest together, it can give you a really good look at what traders are actually doing in the markets and why the move is happening. Whether the move is just a short squeeze or a long squeeze, which is a weaker move than a healthy move where new positions are opening and pushing the price in a certain direction. Whether the bulls or bears are in control and pushing the price and controlling the price in a certain direction. So anytime you see, for instance, right here, yesterday, in this area here, we saw a dump. But was this dump, not yesterday, this was earlier today, excuse me. You see how the CVD is dropping here. So we saw that short positions were coming into the market. But if we come down to our open interest, we can see our open interest for a majority of that was dropping as well. So it's not new short positions. We weren't seeing new short positions come in here successfully pushing the price down. It was late longers that were getting stopped out on their trades. Probably once you started to lose that VWAP, late longers started getting stopped out, and that causes the price to dump to the downside. So it's not as strong as a move to the downside. Well, what happens? You make a higher low, and now we're continuing up here. So it's important to understand CVD and open interest together, because when you see something called a bullish CVD divergence or a bullish CVD absorption, it is a very powerful indicator. When you have your price action making higher highs and higher lows, it's in bullish momentum, in other words, but your CVD is getting lower and lower and lower. That means overall, the market, shorts are coming into the market, but those short positions are not even able to break the price of Bitcoin down to new lows, right? Down to break market structure bearishly. So what does that mean? That means there must be, and if your open interest is increasing, meaning new positions are coming in during that time. So if we have a bunch of new short positions coming in, but they're not able to make the market structure break to a bearish market structure break, that means there must be some sort of big whale in here, right? I'm horrible at trying. Some whale in here that is, let's make him a smiley face whale, that is absorbing all those short positions. It's absorbing all those short market orders. And remember, CVD is market longs are market shorts, right? It's not limit orders, it's market orders. And market orders are the active participants that move the market on a minute-to-minute basis, day-to-day basis. So those market orders are marketing short throughout the day today, but they are not able to successfully make the price break down. Well, why is that? That's usually because there is a whale that is absorbing those positions. And in order to absorb positions, you need new positions to absorb. You can't have positions that were opened in the past already. You need new positions to absorb. So we're seeing a whale down here absorb those short positions. And with that absorption that happens, it's often used as fuel to continue pushing the price up, causing a bit of a new squeeze, squeezing out all those short positions. Because once you start pumping, those short positions get underwater more and more and more. They either have pressure to close it through hitting a stop loss, or they get liquidated if they're using high leverage, And what is a liquidation of a short? It's a market buy. Well, that's going to cause it to go up even more and more and more, and more aggressively as well. So when you see a bullish or a bearish CVD absorption, it is a very powerful indicator that price is going to continue. In this case, it's a bullish CVD absorption. It is very likely that this local trend that for the day since yesterday's low is likely to continue at least up to take out our local highs. Very, very likely. Now, if this bullish absorption continues to build, as we're coming up to that golden pocket at 76.9, man, I would be hesitant to take the short, because what could happen is that's where the squeeze could actually start, right? You go like this and boom, you squeeze straight through it. So we got to be careful there. I do think this is a good area. I mean, it makes sense. The reason why I'm looking for local short positions is because the dump down from yesterday looks more impulsive, and the move so far looks corrective. And if we're looking at our volume in here, let's turn on our volume. You can see on the dump to the downside, let me just move this a little bit. On the dump to the downside from yesterday, look at, as we're dumping, volume is increasing during that entire dump. Now, as we've been pumping, volume for the most part has been decreasing. Now, yes, locally towards this high of the past couple of hours, we're seeing some spikes in volume, but for the most part, we've seen a high volume dump followed by a low volume corrective move to the upside. And when you see these low volume corrective moves, that means that we're likely to put in a lower high and continue down. Even if it's just to make a double bottom, guys. A double bottom would be nice to see, to finally grab that liquidity that we front ran yesterday. Now, we can also look at, I just thought about this, we could also look at a channel that we have let me hide this small volume profile. And we can pull, because if we pull a Fibonacci retracement from our lows from yesterday up to the highs that were made last night, and you can see, where did we bounce this morning? Right around, or this morning / overnight, around the golden pocket. Yes, a little bit of wickage past the golden pocket, but you bounce at your golden pocket. So anytime you have a low, a high, and a higher low that comes into the golden pocket, that is a very good area to pull a channel from, a parallel channel. You go from the lows to that golden pocket higher low up to that first initial high. You put that on the charts and look at, you can even see that it's being respected. Midline, for the most part, is being respected. So oftentimes you will pump up to the top of that channel. Now, if we continue past this golden pocket, that is your golden pocket value area high. We do see the other common target for a one-to-one trend base, or for an ABC correction, or for a 3-wave zigzag correction. It's between the 1-to-1 and the 1.236. So the 1.236 would be coming up to the top of the channel. Also, your anchored VWAP is pretty close to that. You know, by the time we get there, your anchored VWAP might be a lot closer. And then I do want to show you guys one other thing. Let's go into, let me just zoom out onto the 4-hour chart. So last week, and I forget who it was, so I apologize for not remembering, guys, and giving you proper credit for this. But we were looking at pitchforks. Now, I already had this pitchfork on my chart, but I didn't have it on my chart as an original pitchfork. So I was looking at, we have a couple pitchforks in this range. One of the pitchforks that I pulled, and it was because none of this was developed yet, but my original pitchfork that I pulled was from the 60K lows up to that first dead cat bounce high, down to that first major low. And we've been following this pitchfork really well, and it's been working really well. And we're still trading within that pitchfork. Let me just hide this. You can see we're still trading within that pitchfork, bouncing from the lower band again. But after we created a new range high, followed by a new range higher low, we can now pull a bigger pitchfork, pulled from that original range low to the new range high to the new higher low. And then you pull that, and now you can get your price action for this last C wave impulse, right? This C wave impulse, you can get some key levels, and you can see now how well this pitchfork has been respected as an original pitchfork. I originally had it on here as a modified skiff pitchfork. But we can see that, of course, on Sunday, where was the high on Sunday? Rejecting from that pitchfork midline. And where was the low yesterday? Coming into the bottom band of the pitchfork. So this pitchfork is still a bullish pitchfork, maintaining bullish momentum. If we lose the bottom of the pitchfork, I am really concerned that this is all the way over with and that we could actually see a dump to take out 60K. But we are chopping now, once again, guys, within these pitchforks. Let me just say this. I kind of term this myself, so you might not hear this anywhere else, but within this pitchfork, I like to call this band in here between, this is the 0.618 positive Fibonacci. This is the positive 0.5 Fibonacci. This is your negative 0.5, and this is your negative 0.618. But I kind of coined the term, at least in my trading, this is the upper band of the pitchfork. This is the lower band of the pitchfork. And then, of course, you have your midline and your top and your bottom, right? So within these pitchfork bands, you will often see consolidation in and around these bands. And if you dump into the band, you bounce from the bottom of it and you consolidate in here. That's often kind of what creates that bear flag. And then you usually dump to the bottom of the pitchfork. So we are kind of creating some consolidation within this pitchfork band. You can see we're having trouble breaking out of it today. We're just really chopping, finding that price action in here. And it does look corrective to me, guys. Once again, if you look at this move, so the dump to the downside yesterday, increase in volume. The move to the upside since yesterday's low, decrease in volume, meaning it's likely to be corrective. And could we wick past it a little bit? Yes. And then fall back inside of it? Absolutely. You could see that. And I actually expect to see that. But that is kind of what's happening right now, is we're chopping around within this pitchfork band. And if we do start to lose the band, the bottom of the pitchfork is going to be coming in around that $73,000 box, my next big box of support. So if we go back to the Coinbase chart, that is this next big box of support around $73,000. It is the low of your prior staircase range. And remember, we talked about those staircases. Within this move to the upside, you have these kind of staircases that are forming. You know, you get a pump. I guess this is kind of a staircase in here. You get a pump, staircase in here, pump, staircase in here, pump, staircase in here, you know, this pump dump, but then you get a pump staircase in here, right? Or you could say this is all one bigger staircase with a deviation. So we're looking at those liquidity levels underneath those staircases, which is on low time frames. It's just a prior range, right? You had your zone of balance in here. You pump out of your zone of balance. You back test the highs of that range. You continue higher, you know, and then so we're looking at those prior highs and lows and prior liquidity levels within this move to the upside, within this momentum to the upside. So 73,000, the bottom of the pitchfork. It's also your anchored VWAP, and Bybit has a little, the anchored VWAP is a little bit lower than Coinbase. You can see it's coming in around 72,750 or like 72,7-ish, 72,7-ish. Coinbase, it's a little bit higher. It's at like 72.9. But that is that area. And once again, guys, going back to our liquidation heat map, where is your next big liquidity level? $73,000. Seeing coming right into that $73,000 area would take that liquidity. If we lose that, I expect a pretty quick drop down to 70K. Okay. Let me check this chat here. Man, I'm way behind. Gosh, you guys are talkative today. Awesome. Well, thank you so much for that, guys. Yeah, monthly close. Let's see here. Where was that? Yeah, monthly close today, Geek Story. Thank you for reminding us of that. We will mark out our new naked monthly point of control. Actually, we can go into that just a little bit right now. Even though it's not the monthly close, we can first go to the monthly time frame, and we can see that actually no new monthly level. But if we go to, let's just go to the daily time frame, and if we look at our naked monthly point of control, we can see where that naked monthly point of control is likely to come in. Actually, yeah, it's going to be that naked monthly point of control is around 77,650. It's of course not confirmed yet until tomorrow, or till market close today. I just want to double check this here. Yeah, it's coming in right around that high from yesterday. So right around our next resistance. Essentially, if we break above this 76.9, we can look at like 77.9, and that's where your naked monthly would be coming in at. Okay. What are your macro views? Do you believe we will at least retest the low 60s? Yes. Bello Clubhouse, welcome in. I do think as far as my macro views, yes, I think we could make it up to 86, 87,000 before testing those macro lows, but let me hide some of this local TA and we can talk about that just a little bit here. So what I've been looking at since that 60K low, and obviously that 60K low was very important. Let me just hide a lot of this local stuff. We'll delete that. Okay, so 60K low, first of all, if we're looking at our bearish pitchfork, this bearish pitchfork was pulled from key all-time highs. Your January all-time high, down to your 74K April lows of last year, up to your new all-time high. And this pitchfork has been really well respected, but you can see at the bottom of the pitchfork, we wicked past it to hit into a value area low, but we closed the daily candle bodies at the bottom of the pitchfork. The lower band of the pitchfork was acting as resistance, a little bit of a deviation here. Then we finally flipped it to support on the daily time frame, and that's why we're likely that we could continue up to this midline, right? Depending on how long it takes us to get to that midline, it's between 82,200 and now it's getting closer to around 81.5, or by the time we get up there, it could be around $81,000. Right now it's close to 82,000. But something else that I want to talk about and show you. So as far as market auction theory goes, right? Finding balance within assets. So we had a couple things happen here. Let me hide this pitchfork. This was our range in 2024. This is where we, for 8 months, accumulated sideways, and we had a zone of balance for Bitcoin, where at the POC is where the most volume has been traded. That's called the fair value of an asset. So for most of 2024, Bitcoin's fair value was around $63,000. Now, it was considered overvalued if we got up to around $70,000, and it was considered undervalued if you got down to $60,000. Well, after some bullish catalysts happen in the market, after Trump wins the election, the market now decides they're bullish on Bitcoin and they want to break up into new levels of price discovery. So we break up and we break to new levels of price discovery on Bitcoin as an asset. Then for 2025, for the entire year, we form this big sideways range for an entire year. And we established that the fair value in 2025 for Bitcoin was around $96,000, $97,000, right? Around 96, 97. It was considered overvalued when we got up to 110,000, and it was considered undervalued when we got up down to 85, 86,000, about $86,000. So when you have a balanced zone like this, the market will often range within that balance, going from oversold or overbought to oversold to overbought to oversold. Sometimes it will bounce from fair value and you'll get a nice buy from fair value if the market is bullish and willing to buy at fair prices. But once you start to lose this range, now something happens in the market and the market becomes bearish, right? In this case, a war, there was a bunch of catalysts for this to happen, right? Inflation, war, all these different macroeconomic newses. So we lose that range, and this is important. We lost it with an impulse and a high amount of volume to the downside. So now the market is now saying we are no longer accepting the fair value of Bitcoin at 2025 price levels. We are now saying that we want to go revisit the levels of 2024. And anytime you're in an upper range like this and you lose it with volume, you're likely to at least test the highs of your prior range or the value area high of your prior range. If you bounce, like say you came down to that value area high and you bounced, then you would expect to maybe make your way back inside of this volume profile. But if you continue to dump back inside your prior range. And let me go ahead and turn on those. So I have them marked out already. This is our previous range value area low at $60,200. We have our previous range point of control at $63,150. And we have our previous range value area high at pretty much $70,000. So when you start to dump and lose this upper range, you're very likely to test at least the value area high of your prior range of balance. But if you fall back inside of that range, you are likely to drop to fill that range. So we come down, we bounce. The absolute bottom of that crash at 60,000, was at the value area low of the range. We bounce at the value area low, and the daily closes at that pitchfork bottom. And then we chopped around inside the range for a bit. You can see chop between the POC, a little bit of a deviation inside that range for a bit. Now, since flipping, once again, guys, why was this 70K flip such an important flip? Because remember, it was our bearish pitchfork that we flipped from resistance into support, but it was also our prior range value area high that you flipped from resistance. At the beginning of the range, it was acting as resistance. At the end of the range, at support, flipped it into support. So very, very important flip there. And if you start to break out of the volume profile of your 2024 price action, now the market is deciding, okay, we didn't like the fair value of Bitcoin being at 2025 levels, but we also don't like the fair value of Bitcoin being down at 2024 levels. We want to try to establish where that proper fair value is for Bitcoin. So what are they doing right now? And this is high time frame stuff, so it takes time. So the market is saying, all right, we're done chopping around in here. Let's break out. Let's see if we can retest that prior. So 2 levels, right? The lows of the range, you either want to test those prior lows of the range or the value area low. And I know the lows are at 74K, but in this case, I'm looking at this range here. So we're either going to test the lows of the range at 80,500, or we're going to test the value area low. So that means that we could be seeing an A, B, C correction in a bearish move where we are going to take out 60K. We're seeing a bearish ABC corrective move on the daily time frame. So that means it could take a few months to play out before dumping and taking your 60K lows and potentially even coming, much lower. In a bullish scenario, the market is going to decide, okay, you know what? 1, 2, this is going to be a 3. We're probably going to break all the way up to 96. That's where your 1.618 is. Backtest the value area low, reestablish trend back inside the upper volume profile, and continue up, right? So, and you can see here how these key levels, value area low, value point of control, value area high. So if I mark them out, value area low, 86,000, right? Around there. Value or point of control here at, 96, 97. Value area high. And where do they correlate? So we can see that each one correlates. You can see the POC is going to be coming in that upper pitchfork band. You can see the value area high is coming in at the top of the pitchfork. But also, if we pull that trend-based Fibonacci extinction, so if we're looking at an ABC correction, and in that ABC, I actually have it on the chart. Where is it? Right here. We're looking at this ABC, right? Where the C could come up to 86, 87 to back test your prior range. We know that the most common target for an ABC correction is between the 1-to-1 and the 1.236. That's why I have these on the chart. That's why I have boxes around there, because there's also significant confluence with each of these levels. And that is why I think that this is a contracting diagonal in a way, a wave, which is a motive wave, right? In an ABC, you need to have a 5, 3, 5. You have an impulse in here, 1, 2, 3, 4, 5. You have a 3-wave corrective move, and then you have an impulse in C, 1, 2, 3, 4, 5. So we're looking for a motive structure in here, contracting diagonal, 3-wave pullback in B, and then we're looking at an impulse here in the C wave. And this is what we've been in, a multiple 1-2 impulse here. It could be over and we could be about to dump, right? But it's likely the minimum target for a C wave is coming to the 0.618. And we've hit that, guys. It's around 75,200. We've hit it, okay? So it could be over. We've hit the minimum target. We've also, the minimum target is usually to take out the origin of your A wave highs. We've done that. It could roll over now. But the most common targets are to come up to the 1-to-1 or the 1.236. Now, in the bullish scenario, you would want to see us extend in this wave 3 to probably break back inside your volume profile, right? Meaning breaking above 86 and coming all the way up to the POC. Well, if we throw on that trend-based Fibonacci extinction, let me just take this. So it's from the low of A to the high of A to the low of B. We're trying to find the C wave targets. If this is not an A, B, C, but rather a 1, 2, 3, right? And then you get a pullback in a 4, and then you get a 5 and an impulse, then you are looking towards the 1.618 trend-based Fibonacci extinction. So I can take that same trend-based pull, we can put on the 1.618, and oh well, where's the next big box of resistance? Point of control and the 1.618 at the pitchfork band, right? You see how all these have really good confluence. So we know, we don't have to know whether it's going to be a bullish or a bearish scenario. We just have to know the key levels to look for major reversal options. And so what's super important about on the macro time frame, as we're coming up here, are we going to reject from this area and see the big dump? Are we going to reject from this area and see the big dump? Or is this going to blast through and then we are probably going to come up to value area high at 110,000? But in my opinion, you asked, do I think the 60K lows will be taken again? Yes, I do not think this low was the macro bear market low. Because we did not have daily bull divs on the chart, you did on Market Cipher B, but then you on NAMI, but then you invalidated them. And it's just, if we were going to, most bear markets form a bit of accumulation. So if we have some accumulation down here, a Wyckoff accumulation, this would be your tap 1. Your tap 2 is always lower than your tap 1. And then we would need, even if you got to retrace all the way back up to the top of the range, you're either going to see a tap 3 come in as a higher low, usually around the golden pocket, and that's a Model 2 Wyckoff accumulation, or you'll see another lower low, and you kind of create a Model 1, tap 2, your third tap is even lower than your second tap. But we're not really seeing accumulation yet. So I do think we could make it locally a little bit higher, 82 or 87, 86, 87, but I do think we are going to make another new market low. Now, I've been saying this for weeks now, and I still am very strong on this. I do not think we are going to dump to 30K, like a lot of people are thinking, inside of this bear market. I think that the lows are going to be the next macro low we make, which could be at 58, 57K. I think that next macro low we make is going to be the bear market low. I think that's going to be your tap 2 of an accumulation. And then I think you're likely to get a Model 2 accumulation where you put in a higher low here, and then you're off to the races. All right, guys, let me get a drink of water real quick. $40K. Mark, do you really think we're going down to 40K? I mean, man, that's a tough one for me. I respectfully have to disagree with that. I don't think we are going to go to 40K, but it's possible. And we do know that Bitcoin does dump quite aggressively in bear markets. And I guess it would have to depend on what's happening geopolitically as well. We are in a war right now, wartime, and we also do have some pretty bearish macroeconomics. I don't know if any of you guys listened yesterday to Jerome Powell's farewell press conference, the FOMC. I listened very, very closely, and everything he was saying in that press conference was pretty much bearish for risk on assets. He was talking about how now a few of the Fed members are thinking about hiking again. They've all stopped wanting to cut, and a lot of them want to remain neutral, but they want to remain neutral until like late 2027. And that is, and also we have a new Fed person coming in. That is uncertainty. What does the market hate? The market hates uncertainty. We are seeing inflation kind of spike up again. We are seeing an energy crisis. So there is a lot of bearish catalysts that suggest that the bear market's not over. But I just don't know if it's going to be a super aggressive bear market. Okay, thank you, R Pink, for posting NAMI. Real quick, guys, I do want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees, and you can actually get up to 40% discounts on your trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on the amount of volume you trade in the futures markets. And we're trading on the USDT futures markets anyways, guys. So just by trading on the exchange, you can earn extra Bitcoin or USDT, up to $8,100. They're also offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you can get a 50% deposit bonus on that. Most exchanges only do 20%. They're giving you 20% deposit bonuses up to $1,000, and they're giving you 10% deposit bonuses up to $20,000. So if you deposit $20,000, you can get $2,000 free. Now, you do have to KYC level 1 in order to qualify for these bonuses, but every exchange is like that. You will not find any exchange that will actually give you the bonus without a KYC level 1. Okay, I've also partnered with BYDFI to create a Telegram community. It is a private community, but it is free. All you need to do to get into that Telegram community is join BYDFI using my affiliate link. And once you've signed up with that affiliate link, you need to deposit the minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses. But once you've signed up, deposit at least $100. Then you can click the Telegram link in the description of this video. And in that Telegram channel, you're going to type in /verify and then your BYDFI user ID, which is going to be up next to your character guy. It's probably going to be a string of letters and numbers for you, but /verify in your user ID, and that'll get you into the Telegram. And once you're in, guys. And the money you deposit on the exchange is your money. You're not paying it to me. You're not paying it to BYDFI. It's your money to test out the exchange to see if you like it. Okay, second partner of the channel is Blowfin, another non-KYC partner exchange that I've partnered with. Blowfin is offering VIP 1 for 30 days. If you deposit $5, you can get a $10 voucher, so 200% on that $5. And then they're giving some really good initial deposit bonuses as well. You can see 20% on $100. If you deposit $10,000, you can get $1,000 free dollars. That's a 10% deposit bonus. So if you're interested, signing up with Blowfin, it is a way to say thank you to the channel. Using all these affiliate links is a way to say thank you to the channel. I do have 2 KYC partners. They are MEXC and Bybit. MEXC is offering the 10% initial deposit bonus up to $1,000. And Bybit is offering up to $30,000 in futures trading bonuses. And then lastly, guys, the last partner of the channel is going to be this indicator at the bottom of your screen called NAMI Trading. And this is a momentum and money flow indicator that will show you bear divs, that will show you bull divs, that will show you hidden bear divs, hidden bull divs. It shows you the money flow in real time or semi-real time. I use this as a confirmation to enter trades. Once we're coming to a level of interest of mine, I look to see if we have confirmation to enter the trade. And what I'm looking for is like bear divs as we're coming up to a resistance, or bull divs as we're coming down to a support. And since I've been using NAMI, my profit margins have increased drastically because it gets me into the trades that are more probable to play out. If you have proper confirmation, that means it's far more probable that trade will play out. If I don't have proper confirmation, I don't enter the trade. And since using both NAMI and Market Cipher B, my profit margins have, and the trades that I take that actually end up trading like the way I want them to, is drastically increased. And honestly, it will pay for itself almost immediately, in my opinion, depending on your account size, right? Your portfolio size. But I have partnered with NAMI to get you guys 50% off. So if you do click the affiliate link in the description, or RPing posted it in the chat, and you use discount code DIVINE50 at the checkout, in that promotion box at the checkout, you can get 50% off. Okay, enough of that, guys. Let's get back to the TA. I do want to look at our local TA to see if we're going to get that long trade. Right now, we're forming a bit of a triangle. Now, remember, a triangle is a continuation consolidation pattern, right? So we should be looking at a bit of a triangle, and here's forming. And if you pumped coming into the triangle, it's continuation consolidation. You do have a higher probability of pumping coming out of it. That, along with the bullish CVD absorption that we are seeing on the charts, suggest that we will be able to continue a little bit higher. Okay. Yeah, not quicker. Thank you for that, man. Very well said regarding the tools. More confluence. I agree. When you are in a 400x leverage position to the downside with your last 300 bucks, dang. Well, big deals. Well, did you complete that 10 step? I know you were doing a 10 step challenge where you traded from like, what was it, 5,000 to like 5 million or something like that in 10 steps and 10 trades. Did that, and I know you were using super high risk and super high leverage. So I don't know. It sounds like if you're down to your last 300, maybe the last part of that didn't go well for you. Not sure. Or maybe you completed that challenge and you're starting over with 300 bucks. I'm not sure. Mr. Reke-chun, welcome in, my man. Dump, make my a short profitable. Well, yeah, you know, I hope you win the trade. I hope everyone, as long as you're using proper risk management, guys, it's okay to lose a trade. You know, I've won a few trades this week. I've lost a couple trades this week. Overall, I'm still up on the week because your win should be a lot bigger than your losses. And you should always be having a stop loss marked out with your risk calculated ahead of time. Leaving to Germany tomorrow, Mark. Oh, nice, dude. And then Italy next. Dang, that sounds great, Mark. Okay. Yep, Falco's Forge. Much love to you, man. Thank you for lurking in here as always. Appreciate you, my man. All right. He looks like a goldfish Picasso. Hey, man, my skills aren't that good, okay? It's definitely not a Picasso, but maybe a goldfish, that's for sure. Timmy, the whale's in the hood. I love it, guys. Love it. Thank you guys for being here. Mamba, welcome in, man. It will go to 80K. Yeah, I mean, I as well, guys, on the larger time frames, as I just explained about the macro time frames, I do think that this double top up here doesn't look good for a macro top, and especially because some exchanges took the high and some didn't. So I am looking for another high, and honestly, I would really like to come up to that pitchfork midline. It's resting around 82,100 right now. By the time we get up there, excuse me, it's going to probably be closer to $82,000, but we could wick above it to hit that 1-to-1 at 82,278. I am looking to come up to this box up here, at least to test 80,500. That's your prior range lows. So I would like to at least come up there. Yeah, Ryan Van Gogh. Jeez, Mark. What? Okay, CVD futures and spot and Market Monkey CVD are all going up. Why is yours going down? Well, my CVD is on Bybit. So I'm looking at Bybit, and Bybit, we call them the Bybit bros, but there's a lot of large traders that trade on Bybit because it's a pretty established futures exchange. So the CVD on Bybit is pretty nice. Like it works pretty well. You can come in here and you can go on Coinbase as well. You can look at the Coinbase pair as well. But I really do like the Bybit perpetual chart for looking at CVD. Stop it. Okay. So it's probably just a different CVD from a different exchange you're looking at, or it's Market Monkey. I'm not sure if Market Monkey does an aggregated one. Scotland, awesome, man. What up, fam? Just here joining the unemployment line. Oh no, John. Well, John, keep your head up, man. And all I can say to you is you've got the mindset to learn and to put the hours in. So I have no doubt that you will, start slow, man. Start slow. I would recommend, a lot of people say to start demo trading. I actually don't recommend that. I recommend it starting with real money because real emotions will be involved. But start with the amount of money where if you completely lose it all, it's not gonna kill you, right? You're not gonna miss rent or you're not gonna miss a car payment or something like that. Like, let's say $1,000 is a lot to you guys. Start with $500. If you lose it, it's gonna hurt. You're gonna be mad. You're gonna be sad that you lost that money. So your emotions are gonna be involved, but it's not gonna ruin your life. Start with that amount of money, and if you can't build 500 into 5,000, then you're not going to be able to build 50,000 into 500,000, right? So start with a small amount of money, get the process down. It's not about the amount of money you make, it's about the percentages you make. And if you can be consistently profitable in percentage-wise based terms on a daily, weekly, not daily, but weekly basis, then you're on the right track there. Okay, man, I'm so far behind. Dylan Wadia, what's up, man? Is it possible to detect bullish absorption being invalidated? Yes, it is. So, great question there, actually, Dylan. And this is something that I'm a little bit concerned about with this bullish absorption here. With a bullish absorption, you want to see a steady increase in open interest, or a steady, see how this is a pretty steady decrease here? Generally, with a really good bullish absorption, you see a steady increase like this. This is steady in here. See how this is a nice steady increase? When you start to see that bullish absorption forming, but in the middle, we were having a steady increase here. We got a big dump right in here, and then we have a steady increase ever since. But when you are building a steady increase, and then you see a prolonged dump in open interest, that oftentimes does invalidate the bullish absorption. So this is a bit concerning for me, this dump here. But even, okay, so let's say that invalidates the larger bullish absorption from yesterday's low. We still have a very nice bullish absorption coming in from the higher low made earlier this morning. Higher lows, higher lows on the price action on our CVD from that low. Right in here, we have lower lows, and now you have a steady increase in open interest, right? So we are seeing even local bullish absorption on top of the more regional bullish absorption. But great question there, Dylan. And I often talk about that a lot on my channel, how when you see a big decrease in open interest while you're building the absorption, it does oftentimes invalidate that absorption. All right, I need to go. Yeah, just chopping in the triangle for now, guys. Let's see, 6 minute. Let's see if we can bounce from the VWAP again. It would be nice to come down to VWAP maybe a second time, or grab this internal liquidity into the bottom of the triangle. In terms of scalp, it could be right or wrong, but I'm the swing king. Nice, man. Yeah, my longs at 65.9 will remain the best entry before we hit 97, then 108. Well, awesome work on that, Mamba. That scalp from 66,000 pretty much. Here's the thing. If you're looking at swing trading, you also got to look at those big swing trading resistance targets. So for instance, 82,000 is a big resistance, and especially 86, 87,000. Huge resistance. So if you're long all the way from 60, 65, 66K from the bottom of this impulse in here, and what if we come all the way up to 82 and reject and then make new lows, and you didn't take any profit while you were up here? You were holding in massive profit just to round trip it and actually end up getting stopped out. That would be a travesty, a shame. So if you're looking at a swing trade and your targets are at 97 and 108 up here, and you don't take profit and we reject from either of these two levels, man, you have to be prepared for either scenario. So for me, if I was in a swing trade from 65, I would for sure be taking some profit at these purple boxes just to lock in the trade. And sure, if we go higher, great. You know what happens if you go higher? Like say you break above 82, you get up to like 85, you back test it, and then you continue. You take profit, in this area, you can re-add here if it's now being flipped to support, but you want to see a confirmed flip to support. Then you can take profit up here. If you reject and then you come down again, you can add to it here if you're seeing it hold as support, and then you shoot up here, right? I mean, there is a way. It's whether you're scalping or swinging, you can't get too greedy and look at that one trade being the one big trade that's gonna, double your portfolio. You gotta remain disciplined to take profits at resistance areas. I actually set limit TP orders, so I don't even have to be around the screen, or I don't have to get my psychology involved. I set the TP order and I leave. If we bust straight through it, okay, it was guaranteed money for me. At least I made something. Could I have made more? Yes. Another thing about the psychology of trading, guys, is you're not always going to catch the bottom and tops of pumps. Learning to take profit along the way, and maybe you're not going to get the maximum profit you could have gotten, is something you have to contend with in trading if you're going to be a long-term trader. So that's a huge psychology part to trading. 26.5K around September or December, with the biggest leg down coming in a few weeks. Wow, Dylan, that's a pretty aggressive dump bear market. In my opinion, I have to say I don't think that's likely, but anything can happen. We are in a bear market. We do know that Bitcoin generally does drop pretty aggressively in a bear market. We'll see, man. Yeah, we need more unemployments. You're right. The unemployment market. So I was listening to Pal yesterday, and Pal, it was very interesting what he was saying. He was pretty much saying that the jobs market is relatively stable and good right now. Unemployment around 4.3%. But what is not, it's kind of a smokescreen, because there's not a lot of people quitting their jobs right now, and there's not a lot of people getting hired for new jobs right now. So overall unemployment staying relatively low and stable, but it's just because there's nobody quitting or nobody getting hired. And if we do start to see some like firings or, layoffs and stuff like that, and the jobs market continues to remain kind of weak and people don't get new jobs, that's when we could see that unemployment go up, and we could see, an unemployment crisis or a jobs market crisis. Okay. Okay. Yeah, be nice to each other, guys, please. 10-step challenge, maybe need 12. Okay. Yeah, maybe need 12 for Gamblers Anonymous. If I had to buy one of them, if I had to buy one of them, Market Cipher or Nami, which one would you choose? Well, Michael, that's a very hard question to ask. So first off, Market Cipher B, I think it's about $1,500 for a lifetime subscription. And I think there's a yearly subscription, stuff like that. If I'm going to buy it, I would, because I've had Market Cipher since 2019, I think 2018, 2019. I ended up just buying the whole $1,500. And yes, it was a hit, but you can earn that money back. The money flow on Market Cipher is really good, guys. It's really, really good. Nami is much faster in confirming money flow and momentum bear divs. So for scalping, Nami does seem to be better for me. Nami, with the discount, with my 50% discount for a lifetime subscription, I think it's $740 for a lifetime subscription. So it's half the cost of Market Cipher B. So you have to take that into account too. The thing is, I like using both of them in Confluence. And my ultimate trade setups, guys, my ultimate confirmation for a trade setup, especially for swing positions, is when we see bearish divergences on the price action, we see bearish divergences on the momentum waves on Market Cipher B, and money flow is starting to top out and round down. And when we see bear divs on momentum, and usually you have multiple drives of it, and you see money flow bear divs on Nami. And Nami generally will be crossing into the red about when Market Cipher starts that big dump. So that is my ultimate setup. And when I see both of those together, especially on high time frames, it's a really, really good setup for me. Like if you see that Nami Market Cipher confirmation on like the 1 hour, you get a good aggressive dump to the downside. I mean, it's great, guys. So I use them both. Can I say which one is better or which one would I choose? I'm not going to say that. They both have their benefits, man. I've been using Market Cipher a lot better. I am a little bit more familiar with Market Cipher, but Nami, so Nami has this, but Nami also comes with, and I know Market Cipher does too as well, but Nami comes with an SMC Pro where it will show you breaker blocks, fair value gaps, a bunch of different things on the chart. It also shows you Nami D, which is pretty much taking this and putting it on the chart for you. Kind of those red dots and green dots, red, I guess, diamonds, green dots and stuff like that. The bulls, it will show you the bull and the bear divs on it. So Nami comes with a lot of other things as well. I know Market Cipher, this is Market Cipher B. I know there's Market Cipher A, which kind of does the same thing as NAMI D here. Yeah, and just recently, I think it was like about a month ago, NAMI just launched its version 2.0 with adaptive time frames for the momentum waves. And it does seem to be working pretty well. It's a new upgrade they just did about a month ago, and I do like it, I have to say. Divine, check SD and K. Okay, SD and K. K. Oh wait, sorry. SNDK. Okay. Wow. Well, we're breaking out of that parallel channel very nicely, actually. And that was a pretty nice range that we were trading in. Breaking out really impulsive here. So we were looking at, because you saw I had that, let me back up here. 1.236 to the 1.618. So that was a wave 5 target. Now that doesn't have to be where the wave 5 ends, but we were looking at this as a 3-wave corrective move and a wave 4. So now we're in our 5th and final wave to the upside. So what can we see here? A wave 1, a wave 2. You're in your wave 3 right now. We can actually pull that trend-based Fibonacci extinction. So if we come in here and we look at the lows of wave 1 to the highs of wave 1 to the lows of wave 2, we're actually coming up right now and hitting that 1.618. So it is very likely, actually even surpassing it. It doesn't have to end here. That's like the minimum target for it. You can go to the 2 to 1. You can go to the 2.618. You can go pretty high on these things. So on the wave 3s. But knowing that we saw right here a 3-wave corrective move down, and since then we're starting what's very likely to be an impulse because we've come up to the 1.618. So wave 1, wave 2, 3, and 3 could continue pushing higher. Then you're expecting a 4 and a 5. So I am expecting SanDisk to continue pushing up higher here. At least it looks like you're in your wave 3. And it also doesn't look like, well, generally in a wave 3, you do want to see volume increasing, and we are seeing volume decreasing here overall. Actually, let's zoom in on the lower time frames and let's see if we see an increase. Let's go to the 2-hour. Yeah, it's not. I guess you see a little bit of an increase in here at the start of this wave 3. What I would say is it is likely to come higher, even if it's because this 1, 2, 3, we should see a pullback somewhere 4 or 5, something like that. So I do think it will continue higher. We just need to wait for a slowdown on the wave 3, because the wave 3, we don't know if it's going to end relatively right now or if it's going to come up to the 2.0 or the 2.618. But this thing, man, this thing is looking like bullish AF, right? You are seeing some significant bear divs now on Market Cipher. You can see here, higher high, higher high, higher high, and then you got lower high, and potentially lower high, and money flow is draining out overall. So it's getting towards the end. At the end of this 5 waves, 1, 2, 3, 4, 5. So when we start to get to this 5th wave up here, I would really be looking to take some profit and be looking for a bigger pullback. Now, there's got to be a better chart for this. No. I guess not, huh? It's a relatively new stock. The earnings crazy, doubled revenue. Wow, man. Yeah, this thing is bullish. So we are starting now to make new highs on decreasing volume, and that is your first sign that you could be seeing a potential top coming in soon. You also see 1, 2, potentially 3 drives of bear div on the weekly. But remember, this is on the weekly chart. So this thing could pump for another 3, 4 weeks, 5 weeks, right? You see bear divs. And then if this rolls over in the next few weeks, you're going to see a bear div there. So I would say careful. I would definitely not be buying it now, like spot. I would definitely not be buying it spot now. But it's likely to continue up for the next few weeks. And I'm not saying straight up. I'm not going to say every single day is a green candle. We are going to see pullbacks in there, but it does look very bullish. We could actually pull a pitchfork from the lows of wave 1, highs of wave 2, to the lows of wave 2, and we can put on that original, because in a wave 3, you want to use that aggressive trend, and you could be seeing your 5th wave end around the highs of the pitchfork, 15, 16. So yeah, I mean, it would make sense if we continued in the 3rd wave up to that 2.0, reject from that upper band, see a pullback in a wave 4. Now your wave 4s tend to be flat and they're around the same amount of time as your wave 2s. So if we see a pullback kind of flat coming to the bottom of the pitchfork, and then you generally will see that 5th wave at least make it up to the midline. But sometimes you do, like that upper band, this with Bitcoin, that's exactly what happened. We made it up to the upper band there. So I mean, I would really be looking at something like that to happen over the next few weeks. Yeah, please hit the like button, guys. If you got any sort of insight into the market, the market from this live stream, please hit the like button. Okay. Baby Genius, welcome in, my man. And thank you so much for the kind comment. I am doing well. It's so good to see you in here. Tello Cali, welcome in as well. Crypto Creek, can it hit 77K? Yes. Bitcoin, I'm actually looking for it to come up to right around 77K. So what I'm looking for right now on Bitcoin is to come up to around 76.9. And if we break above 76.9, I'm looking to come up to 77.9, really. So let's go back to the low time frames here. It looks like we're coming up to the top of the triangle. What I'm looking for is we have a range after the 2 impulses down. This is a big volume impulse to the downside, volume impulse to the downside. And then after that, we've kind of been going sideways right here. So I'm looking at this small range, internal scalp range. If you pull your volume profile, you can see the value area highs coming in right around 77,000. And then if you pull your golden pocket, 76.8, okay, I guess the value area highs just increased a little bit. Let's see. Oh, actually, let me do this. That's why. Let's pull it there. So you can see your value area high, golden pocket, is around 76.9. So I'm looking to come up into this area. And then if we take that trend-based Fibonacci extinction from the lows to the highs to the higher lows, and you're looking, and then this is an A, B, C, or a WXY, just a zigzag correction. You're looking between the 1-to-1 and the 1.236 Fibonacci. You can see your 1-to-1 is right in that golden pocket as well. So yeah, I do think we're at least likely to come up there. And we also have some liquidity right into that level as well from today's highs. If we look at our liquidation heat map, and let's go to the 24-hour time frame, you'll see here that we do have some local liquidity just above us right there, right up into about 76.9. You can see that local liquidity right in there. And that's quite a bit of liquidity. Brian Woods, welcome in, man. It's so good to see you in here. It's been a while. Thank you guys for joining. Time Attack, much love to you. Thank you for being here. Thank you for modding. It's also good because people have second jobs already. Yes, you're right, Time Attack. People have second, third jobs. I mean, it's crazy. The problem with AI that it doesn't replace the buyers. It just replaces their jobs. That is very, very true. And that is something we're going to have to contend with as a society over the next decade. We are all lovers here, not fighters. Thank you, Little Rich. Appreciate the comment. Yeah, guys, just be supportive to each other, even if you don't agree with each other. you know, it's I just appreciate all of your guys' kindness, support, and how you guys are all, you know, nice and chill in here. So thank you for that. Nami is better, newer. Yeah, I agree, Bansbell. I agree. Uh, the newer version of Nami is definitely upgraded. I would say that. Only been watching for a few days, but you're smart as fuck. Well, thank you. Zombie Fish 420, welcome in, my friend. Welcome to the community. Thank you for joining the live stream. I appreciate that kind comment, man. And I hope you stick around. Hope you do get some insight into the market from the live streams. Hope you, if you want to learn here, thank you so much, dude. I appreciate that. Velo chart is dope. For aggregated CVD, you can overlay heat maps. Okay, Velo chart. I'll have to Velo. Okay, I will check that out, baby genius. Thank you for letting me know about that. What are the settings for the VWAP? Well, you'd have to ask Boyan the settings for the VWAP, but no, my VWAP is just a session VWAP, guys. If you just put it on the VWAP, it's on the session. I just turn off the multiplier bands. You have your multiplier bands in here. I just turn it off, and it's a session. You can change it to a weekly VWAP. Weekly VWAP's actually coming in around Golden Pocket as well. That's interesting. There's also another tool that I like to use, guys. So I keep this one on session VWAP, but if I do want to look at the weekly VWAP as well and the monthly VWAP, there's a really cool tool called MTF key levels. If you type this in indicators up here, MTF key levels, you can turn this on and it will show you previous day open, previous month open. You know, you can get a bunch of crap on here. Like the opens, the closes, the highs, the lows. It'll give you your, see, you can have daily open, daily high, daily low, previous day open, previous day high, previous day low, previous day EQ, equilibrium. You get the weekly levels, you get the monthly levels you can turn on. You can even turn on yearly levels. You can turn on daily VWAP, weekly VWAP, monthly VWAP. I mean, really, really cool stuff in here. And it will label it all for you. So this is a really good tool that I like to use. This MTF key levels. Yeah, Jojo, thank you for welcoming Zombie Fish in. Appreciate your kindness here and support for the community. MKJK, is AVAX a good investment? Well, I will tell you this. I do own spot AVAX. And I do think AVAX overall is at a pretty nice low as far as the bear market goes. Let's go to, hold on, let me go to the daily time frame, and I want to go to the Coinbase chart. So we are starting to see a nice consolidation range at the lows here. You can see this range. One thing that I don't like about this range right now is very similar to Bitcoin. Our first low, our crash low is our first low, and in an accumulation. Hold on, let me see if I can find in accumulation, guys, there's two kinds of accumulation. There is a Model 2 accumulation, which looks like an inverse head and shoulders, right? So you get your tap 1. Your tap 2 is always lower than your tap 1, whether it's a Model 1 or a Model 2. And then you get your ranging, right? And then your tap 3 generally comes down to Golden Pocket 786. And that kind of what creates that inverse head and shoulders. It's a bottom reversal pattern. Then you tend to get your expansion phase, and then you'll get some distribution afterwards. In a Model 1 accumulation, it's like our descending channel where you see the selling exhaustion, right? So you get your big dump, you get your tap 1, you kind of chop around, maybe you see a deviation of the channel, you get your tap 2, and then, you maybe get above the channel for a bit, break back into it, and then you see a tap 3. It's always a lower low, but you see that kind of starting to overlap. You see that overlap starting, and you start volumes generally decreasing as you're making new lows, and that's your Model 1 accumulation. And then you usually see a breakout, a back test of the channel, and expansion. We are not really seeing accumulation yet. This is a nice accumulation range forming, but it looks like it's not done. Could we come down, take out that low, get a tap, chop in here for a bit, chop in here, and then see a higher low, tap 3, and then you get expansion all the way coming back up into this prior range up here? Yes, I do think we could see that. And this, upper range in here is where I think we can expand up to. You are pretty much at your overall lows on Coinbase. Now, I know that Bybit or Binance, no, actually, yeah, this is near your bear market lows, right? Your all-time lows. So you can see you're forming a nice base here around your all-time lows. And now we are starting to see volume decrease as we are starting this range. I personally would like to see us, so if we look at now diagnosing this range, and let me just hide some of this. We can, let me get rid of, I'll see if that's naked first before I delete it. And I believe, yeah, that 862 was a prior low. I'm going to get rid of that now because we've taken it out. Do we see, so look at, on NAMI, between this low on the weekly and this low on the weekly, we saw bull divs. Money flows crossing into the green. Market Cipher did not. Now, remember what my prime setup is when Market Cipher, what the heck's going on here? When Market Cipher has bull divs on momentum, generally, NAMI will have multiple drives of bull div on momentum, and the money flow will see some bull div. So say the money flow comes back into the red a little bit and then comes back up into the green. You'll see money flow bull divs. You'll see multiple drives of momentum bull divs, and Market Cipher will see one drive of bull divs on momentum, and then the money flow will generally starting to be coming back up. So when we see that, and if we put in another new low, first of all, if you make another new low below this low, I would absolutely buy some to hold spot long term. And that, I'm not a financial advisor. I don't give financial advice. This is not financial advice, but that is what I would do personally. Especially if I plan to hold it long term. But you can see how we're starting to consolidate near the value area low of the range and near pretty much your all-time lows on this thing. So let's go into the daily. Now we can focus on this daily time frame. So let me hide this bigger weekly range. This daily range in here, I mean, we are starting to see a rejection from value area high, rejecting, and we're starting to lose POC. So it's likely that we rotate down to value area low. At the very least, we're probably going to rotate down to value area low. If we pull a volume profile, or excuse me, a Fibonacci retracement, okay, we're actually hitting golden pocket yesterday, grabbing liquidity and hitting golden pocket yesterday. Let's zoom in on this to the 4-hour chart. Yeah, I would like to hit that value area low. You can see all of this liquidity in here. And I guess, did we sweep it all yesterday? Man, yesterday might have been a good low. Yeah, we double bottomed there at 892. So we didn't grab all of the liquidity from this these internal liquidity trail. You grabbed 2 of them, but you didn't grab this last one. So it would be nice to actually hit value area low to grab that liquidity. What we can look at is our naked weekly points of controls within this range. Nothing below us. We do have a naked weekly at like 1028, 1027. Let's look at our naked dailies, and I want to go on to the 1 hour for that. Okay, we do have a naked daily coming down at 869. This has been hit, so we can grab this one and bring this one down here. And we can add a naked daily here. Okay, 869. There you go. And if we look at our 786 Fibonacci, it's going to be very close to that naked daily. And it would sweep all this liquidity. We also do have, back to the 4 hour. Well, I guess there's still a little bit of a fair value gap in here too from this big candle. So you could fill in that fair value gap. I think that this would be actually a really good support level. This naked daily 786. And unlike Bitcoin, where we're seeing that contracting diagonal in an A wave, you get your 3-wave move down in a B wave. We haven't seen a new high in a C wave yet, taking out the highs of A. Unlike Bitcoin, Bitcoin's done that. We're just ranging more sideways. So are we going to see something like this and create that C wave that takes a little bit longer, dump back down to make new lows, and then this is your accumulation range, right? And you get this accumulation that lasts, 4 more months or so, 5 more months. Gosh, it is not looking near as bullish as like Bitcoin, Ethereum, Solana. Did we have some bear divs? We didn't really have bear divs on this high here. And it looks like it was mostly a golden pocket rejection. Wicking a little bit past the golden pocket. Grabbing this liquidity right here. But yeah, I would say it's to me, it's a pretty good project overall. Now, be aware, guys, the altcoins might never, ever recover. Like, I think there's a few good ones. Bitcoin, Solana, Ethereum, XRP, and Chainlink. I mean, those BNB is another excellent coin. This was a great short, by the way. And if we come down to 600, I'm looking for a long down here, guys, on BNB. But yeah, XRP, I would say it's a good investment in my opinion, not financial advice. USAR pumped 17% today. USAR USDT. Whoa. Yep. It's a pretty dang new coin. Guys, be careful with these new coins because you will see pump and dumps on them. I mean, you were in a really nice descending channel here. You broke out of that channel. That's pretty much all you could do. You could say that this is the start of an impulse, right? Oh, man, even this looks like a triangle in here, but wave 1, you get your running flat in a wave 2. This is obviously your wave 3. Looking for a 4 and a 5. That's what I'd be looking for. Now, this is relatively new, and you're pumping up pretty aggressively here. Yeah, you're coming to that 3.618 right now. There's not much you can do on this, and I don't know if there's another exchange. Doesn't look like it. Yeah. I wouldn't be buying towards the top like after a pump like this. Let's just say that. Oh, earth metal. Okay, sorry, bro. Earth metal stock. USAR. Yeah, nice pump today. I mean, this is a really nice bullish engulfing candle. Engulfing the rest of your red daily candle from yesterday and continuing. You are coming up to those highs, those local highs from last week. So you do got to be careful of an SFP here. It looks like it closed right underneath it, or maybe it hit it. Yeah, it hit it. Hit it and closed at it. You suck. Yeah, I do. I guess I do suck, huh, Mark? I'm always in crypto mindset. Man, look at this. Even on the log scale, flat, 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 flat. This looks like a heartbeat, in my opinion. Jeez. Well, we know that they need a lot of rare earth metals. The lithium that's being mined for batteries, all the rare earth metals that are used in these chips. Man, this could be forming also a bigger triangle in here on the daily time frame that you're attempting to break out of. something like this. Three-wave move and you get in a triangle, you're looking for a three-wave move in an A, three-wave move in a B, three-wave move in a C, a three-wave move in a D, and then a three-wave move in an E. A, B, C, D, E, but this doesn't look the nicest in here. It is seeing a breakout. You're at those previous week highs, or like 2 weeks ago. So I would be careful to see an SFP of those highs. It's also going to be your log golden pocket. It's definitely at resistance here. And you did take out that high from last week, just barely, but you did take it out. You can see that. So you do have some pretty significant bear divs here that could be forming. Money flows draining out. Yeah, you could see some significant bear divs come in here. I would be careful for the SFP. If you don't get that SFP, I would be expecting, honestly, I probably would expect to come up to take this high out. Okay, sorry I don't have the stream audio on at the moment. I had to take care of meetings. Oh, no worries, Crypto Clown World. Yes, Baby Genius, yes. In ABCDE, you're generally looking for three-wave moves within that triangle in an ABCDE. It's all corrective moves, right? And it's part of a larger corrective structure. Yes, please hit the like button, guys. Please subscribe to the channel. I do got to leave in about 10 minutes, everyone. So we'll check Bitcoin real quick here. Oh, I wanted to talk about USDT. That's another thing. Let me go into USDT real quickly here. Now, we've been talking about this throughout the week, and we talked about this last Friday as well. USDT dominance is inversely correlated to Bitcoin. So if USDT dominance is pumping, Bitcoin is usually dumping and vice versa. Now, last week, overall on USDT dominance, we've been looking for a corrective move for the past few weeks, right? This corrective move in here to come down to the 382 or the 0.5 and then get a move up to take out these semi-equal highs up here, which are pretty much, I think that's going to be the end of the bear market. These semi-equal highs up here. And we're looking for a 1, 2, 3, 4, 5, right? Now, inside of this move up from where was I looking at? From these lows at 3.7%, we broke out of our lower volume profile, and look at this. We're looking at like a corrective move just like this, and then continuation. And I'm looking at another corrective move like this, continuation. We're still in a bullish trend. We were losing the value area low of the range last weekend. We were starting to lose it towards the end of the week in the weekend. Let's go to the 8-hour chart. We were able to get back inside that volume profile. We flipped the value area low to support. We chopped between the POC and the value area low. We flipped it to support. We came up and we flipped the POC to support as well. So because we flipped the POC of this larger range to support, there is a chance that we could work our way up to value area high. But I've been saying that we have a smaller range that we're looking at, this sideways range in here, and we have literally equal range highs. This range high and this range high are literally equal. And so when you see a double top like that, twice the liquidity, if you do come up here, stop that out, maybe come into the golden pocket, stop that out, and then see a move down to actually hit the 382 and actually hit the naked weekly and the naked daily right on top of each other. So I'm looking for this corrective move to extend a little bit. But if USDT locally is going to keep pumping here, to take out those highs, that means Bitcoin locally is going to keep dumping. I'm not talking about major dumps, but I'm talking about, dump down to 74.6 or maybe even 73K, where that next major liquidity level is. But once we hit, and then I think we are going to come down at least to hit that naked weekly and that daily level in the 382. The 382 hasn't been hit yet. Once we hit that, that is when we could see Bitcoin topping out at 82K, 80K, maybe 86K, or actually, if we get to 86, I think we'll be down here, which is another common target for that fourth wave. But then I do think that that's another reason why I think Bitcoin's in an ABC and it's going to crash. Why I think this is an ABC and then we're going to crash is because USDT inversely correlated. We're in that wave 4 corrective move on the daily. And then I expect us to make one more pump up to take out these semi-equal highs. So it's interesting, though, to me, locally, USDT has been pumping. Now we are starting to find some resistance at the value area high of our smaller range. This smaller range, we're at the value area high. We're starting to see a little bit of resistance. We did take out this liquidity, which if you remember last Friday, I was talking about at least coming to take this liquidity, but I would rather see us come up here and take both of these. So we just have to see, if USDT is going to keep pumping locally, Bitcoin's probably going to keep dumping. And we're about to cross into the green on money flow on the 8 hour. 8 hours is a really nice time frame to look for money flow. I get that NAMI is crossing back into the red just now. Let's go to the 2 hour. All right, we did see some bear divs here. Higher highs, lower highs, lower highs. Man, maybe we are going to reject from this value area high because we did grab this liquidity. This looks a little bit corrective to me, though. This sideways range. Now, this, I wouldn't say this is a bull flag, guys, because your flag is getting already too long for a bull flag. If you're looking at a bull flag, you can take your trend-based fib time. You go from the bottom of the pole to the top of the pole, double click it. And generally you want your flag to be around 1 to 1.618 times the length of the pole. If you start crossing the 2 fib time, it's starting to invalidate it at least as a bull flag. Now that doesn't mean that it still can't be a B, and a C wave that breaks up, right? But it's unlikely to be a bull flag that breaks straight up to the bull flag target. I mean, it is kind of a nice target, though. Okay. Let's go back to Bitcoin real quick. Yeah, we're trying to break out of this triangle. Come up here. Remember, we still are seeing local bullish absorption. So let's just do this. Just to get rid of that drop in open interest there. We are seeing a pretty nice steady increase in open interest. Your CVD is decreasing and you are seeing higher lows on the price action. So local bullish absorption here. Okay. Sorry to repeat, USDT formed a perfect bullish Gartley on the 2 hour. Pretty scary, actually. Confluent with an up. Yeah, interesting, baby genius. So you're looking at a bullish Gartley pattern. Confluent with an uptrend line as well on the X 417. Yeah, to 422. Well, I mean, we're back inside the volume profile and we're above the value or the point of control. All right. What was this? Could you please update Tau? Yeah, it looks like it's about to pump. Okay, we'll look at Tau just for like 2 minutes here. There we go. All right, so we tried to break out of this channel and then we fell back inside. And when you fall back inside a channel, you generally will come to the bottom. We are attempting to bounce from the bottom of the channel, but be careful, guys, because we saw the fake out to the upside. And all of this is liquidity. This is a giant liquidity cluster that if we start to lose this, I expect us to sweep it all, like relatively quickly here. It would have been better to come up to grab this liquidity, like see the fake out of the channel to grab liquidity and then fall back in and dump. We didn't grab that liquidity, which is a bit of a shame, but I would just be looking at this range, right? After this big dump, you're going sideways. You're at the POC and you're at the channel support. This could give you a small bounce to the midline. But you are seeing, okay, first off, on the daily time frame, between this high and this high, you are making confirmed bear divs now because the momentum wave has rolled over. Your money flow has topped out here. Market cipher, the money flow is starting to top out here. I would be really cautious of a breakdown. What we're looking at when you're in an ascending channel like this, here, if volume is decreasing while you're pumping up in that channel, it is likely to be corrective. And I would say it's kind of hard to tell here. Let's go to the 4-hour. Yeah, volume's getting pretty low here as you're moving up in that channel. So I would be careful of that bigger dump. Yeah, it does. I mean, there's definitely a bullish count in here, a wave one, except the one thing I don't like about this wave one, and we talked about this, it looks like it's a 3-wave move. Could you say that this is like a 1, 2, 3, 4, 5? Yes. Then you have your wave 2 in here, your wave 3, you have a flat right here, running flat, and a wave 4, and this is a wave 5. So if that's an impulse, if this entire structure is an impulse, then you're looking to come down in a corrective move down to your golden pocket or your 786. So, 207, 175 looks even better. And remember, we rejected from our pitchfork midline. You're chopping around in your pitchfork band right now. So let me hide this channel. You can see you're chopping around inside of that pitchfork band. You pretty much, in this move down, 1, 2, our third wave came pretty much to the 1.618. So this could be a wave 4 to get a wave 5 just to make a new local low. That is your bigger, we're looking for a bigger A, B, C to come down golden pocket 786 or so. And let's go look at our trend-based Fibonacci time. We'll go from the start of the impulse. Man, let's go from here to here. Yeah, you are passing your 382 fib time, so that's at least good. So in other words, this low could be the ultimate low, but it doesn't look like, I mean, is this just a 3-wave move here where it's an expanded, in your C wave, it's rare to come down to the 1.618, but it is not an invalidation. And then if that's the case, you want to see an impulse starting from here. And so far, this does not look impulsive at all. I would be looking for a new low. As far as like scalp trading this thing, you are at your channel support and it's also your POC support. So you could get a small bounce from inside of this very local channel in here. You're at the POC, you're at the channel's bottom. So yeah, could you see a small bounce here and come back up to the midline? I think you could. Okay, let's check Bitcoin here. Anon, what's up, man? Hey, Divine, potential double top or tweezer tops that close on 5-day is make or break for Bitcoin to crash. Or can a bull trap happen to sweep higher highs 80 to 87K? I do think I do think we could on Bitcoin come up to sweep those 79,500 highs before seeing a bigger crash. I still am actually looking for a new high. This double top is so crappy up in here. Does it happen? Sometimes, yes. But generally, when you see a major top, all the exchanges take the high of your last prior major high, and we didn't see that. So I am kind of looking for, now, could we pull back a little bit further first? Yes, we could. But I am looking for us to still kind of come up. Gosh, this entire live stream, we saw no price action. Okay, guys, I do got to get going. I will live stream tomorrow at 3 p.m. Eastern Standard Time. If I take a trade at 76,900, 76,800, I'll post it in the Telegram for you guys. So remember, if you want to join the Telegram, all you have to do is join BYDFI using my affiliate link in the description, and then you deposit the minimum deposit of $100 or more into that account. That's your money, not my money, not BYDFI's money. Once you've done that, you click the Telegram link in the description of this video, and in that Telegram channel, type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. So thank you guys all so much. Let's see. Should I worry about the double top? Okay, appreciate it. And scenarios of what will come. Yeah, we did. Anon, we went through Bitcoin pretty much in depth at the beginning of the live stream. So if you go back to that, you'll see a lot of what I was talking about there. Mark Dutch, thank you so much for being such a good mod, for being such a just a fun person in the chat. Time Attack, R Pink, much love to you guys as well. Samuel S44, thank you guys all for modding for me. Love you guys so much. I will see you tomorrow at 3 p.m. Eastern Standard Time. Please hit the like button on your way out and enjoy your guys' night or wherever you're at in the world, morning, afternoon, evening. Much love, guys.